Good afternoon and welcome this afternoon to Trading Growth and Value Stocks. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. There are the closing bells. That means the trading day is done, and we're going to jump into this discussion here really quickly. But first and foremost, I want to welcome all of you for joining us, whether you are here on a regular basis and whether you are here for the first time. Welcome to all of you. I know we've got a bunch of new folks here today, so thank you for joining us. Now, I've got my good friend Michael Fairborn out there in the chat today. He's going to be helping out in answering your questions and keeping the discussion going. I did happen to put a quick reminder in the chat, given all of the things that are going on right now, great opportunity for us to focus on the content and the things that we're talking about, and also a great opportunity for us to stay away from political discussions and keep it focused on what's going on in the market. Thank you for doing that. Michael Fairborn will help out with that as well. Mike's a 20-plus year veteran of the financial markets, and he's a great resource to have. And if you're joining us here in the live version, thank you for being here. If you're joining us in the recorded version, you can participate in the discussion as well by leaving comments in the chat. So we're going to get into this discussion here really quickly. Then I'll answer a couple of the quick questions that have come up. But a couple of quick housekeeping items as we get started with this discussion today. Remember that everything we talk about is simply for illustrative and educational purposes only. It is not a recommendation or endorsement of any particular security or strategy. Remember that Schwab doesn't recommend these technical analysis or fundamental analysis or probability analysis as the sole means of investment research. They're all theoretical in nature. None of those are guaranteed as to what might happen in the market. Now, we're going to be using the thinkorswim desktop software platform today, specifically the paper money version of that platform. It's not a guarantee of future success out there in the real world, but it's a great sandbox in which we can learn and examine and discuss and experiment with what is going on and do that in a way that helps us to learn. So keep that in mind. Also keep in mind some of the differences, and we'll point out a couple of those differences today. One of those differences is that the paper money version does not allow the use of studies in building searches and scans, while the live money version does. So keep that in mind as you move your practice and your research from paper trading to live trading, that there are going to be some of those differences here. Now, also remember, there are risks associated with investing in things like dividend-paying stocks. Dividends aren't guaranteed. Dividends can and do change or may be stopped. So be aware of that. Also, remember that investing in stocks involves risk, including the loss of principal and past performance. No guarantee of future results. Now, I wanted to answer a couple of quick questions here as we're getting into the discussion, and part of that goes along with the question that Greg was asking, which was, when am I on the Schwab Network? By the way, the Schwab Network brought to us by our media affiliate, Charles Schwab Media Productions, separate but affiliated company. I host a show on the Schwab Network called Your First Trade. I'll show you where to find that here in just a minute. But I also wanted to point out something that you might be interested in as well. One of the things that I do on a fairly regular basis is I teach and help to facilitate our live education events. So we've got a couple of those live events coming up. Coming up next weekend in Detroit, the 11th and 12th, I'm going to be at the Detroit Marriott at the Renaissance, along with Ray Kimbrell, Scott Durfee, Kevin Horner, Barb Armstrong, I believe, is going to be there as well. And we're going to be teaching technical analysis and option strategies over those 2 days. Then coming up in Denver on May 2nd and 3rd at the Gaylord Rockies, phenomenal property, we're going to be teaching the same thing. That's also going to be technical analysis and option strategies. And then coming up in Anaheim on May 30th and 31st, we're going to be revisiting our advanced options strategies 2-day workshop. We just got done with one in Chicago and Schaumburg a week or so ago, along with Kevin Hinks and Alex Coffey from the Schwab Network. That's why I wanted to bring this into this discussion as well. But Kevin and Alex are going to be there with me in Anaheim, as will Joe Mazzola and a few other folks. And that's going to be a great opportunity to discuss those advanced options strategies. So if you are brand new to options, Detroit and Denver are going to be the places for you to join us. If you are an advanced option trader or an intermediate option trader, and you want to level up your skills, join us in Anaheim for that Advanced Option Strategies Workshop. And by the way, that Anaheim event, we also include a segment on Introduction to Trading Futures, and I teach on Tuesday mornings on a regular basis the Trading Futures webcast. Michael Fairborn is often my chat support companion there in that webcast, so we have a great time talking about what's going on in the futures markets. So join us for these events. You can register right here at the top, schwab.com/events, and I'll show you some additional resources as we get to the end of the discussion here today, but those are some of the things that I wanted to talk about and wanted to answer those questions. Now, we'll get into this discussion here. A couple of the questions that have been coming up are, should we expect short-term trades now to potentially favor growth or value? And Villager, that's a phenomenal question, and you're always great at asking those questions and kind of advancing the discussion in terms of that process. So that's really kind of going to be part of the discussion. Then what we're going to do as we get into this discussion today, we're going to talk a little bit about how we might find some, I'll just tease it here a little bit, how we might find some of these growth stocks. And then number 3, how we might trade some of those potential growth stocks. Now, I'll tell you what, Michael Fairborn just did a phenomenal job, taught a masterclass just a little while ago about market and sector analysis and breaking down kind of the way that the market is moving. And he did a phenomenal job. That recording is going to be up here in just a minute. But this is where we're going to head in this particular discussion. Now, you are what you think. Michael Fairborn is going to put that link out there for me, but it is simply schwab.com/events is the quickest way to get to it. Then scroll down that page to the registration links for each one of those events. I'll have Mike put that out there in the chat as well. So let's do this without any, okay, so I'm going to do one thing before we get into this. We'll talk a little bit about some of these 3 investing styles. These are covered in this particular webcast. I'm going to focus on one, but these are some of the other particular approaches that you might see in the archives. But the style that we're going to focus on is primarily this growth investing style. Investment style that focuses more on capital appreciation, expecting that the price of the stock is going to go up, and less importance placed on intrinsic value or generating dividends. Now, we're going to tweak that a little bit here in this discussion. Now, value investing is a little bit different perspective. It is a style that focuses on stocks that are trading at a relatively low price relative to valuation parameters, meaning, hey, this is a company that's pretty well valued, meaning it's got good intrinsic value, but the market maybe has forgotten its price or under recognized its intrinsic value and seeing that potential for move higher. Then income investing is a little bit different. Income investing is something I know that Michael talks about quite often, is income generation through the use of dividends or interest payments, or even extending that to the use of certain option strategies to generate income in a portfolio. But we're going to focus primarily on growth investing. We're going to be less focused on the approach of trying to find intrinsic value, and more focused on the idea of a stock that has the potential to grow its stock price or its share price, different from the value of the company. So as we do this, and as I switch over to the Thinkorswim desktop software platform, I'm going to tell you a quick joke. And it's relevant to what we're talking about, right? The joke is simply this. A fundamental analyst, or a value investor, in other words, and a technical analyst, or we might call them a growth investor, walk into a bar. And they're having this ongoing fight back and forth between each other about growth versus value, intrinsic versus extrinsic, nurture versus nature, that type of thing, right? And so they're battling back and forth, and eventually they start shoving each other. They happen to run into a server at the bar who's carrying a cutting board and a big knife. And the knife happens to tumble off of the cutting board, it falls, and it actually hits the fundamental analyst in the foot, stabs it right to the floor. Technical analyst, in the meantime, has jumped out of the way. And the surfer says, well, why didn't you get out of the way, to the fundamental analyst? The fundamental analyst says, well, I was expecting that the knife was going to recognize that it was falling and turn around and start going up at some point. And so that rarely happens, but that's kind of the perspective here. We're going to look for stocks generally that are already moving or are giving us indications that are moving in a particular direction, as opposed to looking for those that maybe at some point the market might recognize their intrinsic value, right? So yeah, Nameless, great question. What points are considered to fall into these categories? We'll talk about that as we get into this discussion. And it's a whole school of thought in this perspective, right? Now, growth stocks generally are those, there are some characteristics of growth stocks that are kind of generally kind of the approach, right? Growth stocks differ from value stocks. Growth stocks are expected to earn capital gains as a result of strong growth. They are generally expected to see stock price improvement. Oftentimes they are younger stocks or smaller capitalization stocks. Oftentimes they are technology or growth sectors by name or by the kind of classification of what they do. And generally, growth stocks tend to have higher multiples, meaning higher PE ratios. They're more expensive relative to that valuation, but there's a forward-looking expectation of that growth potential. Now, that being said, value stocks, on the other hand, might be those that have lower PE ratios, meaning they are undervalued price-wise relative to their intrinsic or relative to their earnings. And so those are some of the characteristics of value stocks, right? Also, value stocks oftentimes will have strong dividends or strong dividend growth. But if we can find all of those things, or if we can find some of those things, that can be a helpful scenario. So I want to take a look at what's going on in the market right now. And as we're talking about this, we may very well see some aftermarket price movement, just as things kind of start to settle out here a little bit, as we're starting to get a little bit more clarity on the issue of tariffs. But taking a look at the S&P 500 today and over the course of the last couple of weeks, going back to kind of the perspective of what's going on in the market, starting to see a little bit of a bounce here, right? And seeing that potential bounce up off of this horizontal support level, at the same time seeing a little bit of a divergence in a momentum indicator or a sentiment indicator, depending on how you want to characterize it, but the RSI, the relative strength index. And that bit of a divergence where prices are starting to push towards the highs of those candles when prices making kind of equal lows suggests that maybe there is a stepping back in. Now, one of the things that we've probably seen over the course of the last month or so, maybe month or two, is this correction that the market has made, right? We've seen this pullback in the S&P 500 to the tune of a little over 10%, and we started to see a rally, and then it came back down. This is the 200 period moving average, which is for many traders a long-term trend indicator. That long-term trend still up, but rallying up to the 200 period moving average, failing there, now rallying back up again. So the question is, does it get through this area? Does it get through that resistance area where the 200 period moving average is and where it's run into before? Or does it fail there again? But there's some strength here behind this move. And you look at equal points where it was down at that low before, the RSI was lower. Where it is now, the RSI is higher. And that would suggest that there was some buying pressure stepping in. So from a growth and value perspective, there was a bit of a rotation. And Michael Fairborn has talked about this. I talked about this a couple of weeks ago in that market and sector analysis webcast, in that there was a little bit of a rotation out of some of these very strong growth names into some of the defensive sectors of the market. Things like consumer discretion, or consumer staples, things like utilities, things like, things unlike information technology and communication services, right? We've seen that rotation out. But, one of the things that we might think about, right? One of the things that we might think about is that when it comes to resumption of leadership, if this market is resuming its leadership, right, which is the potential here from this bounce, that it's very likely not going to be, at least initially, the move into, or excuse me, this rotation into these defensive stocks. I mean, you might think about, so let's think about two different stocks comparatively, right? Amazon as a potential growth stock versus Johnson & Johnson, for instance, as a comparative defensive stock, right? And we might think, okay, cool. Johnson & Johnson, when the rest of the market is moving to the downside because it's consumer staples, that it tends to lose less, right? We tend to look at that from that defensive perspective. But at the same time, when it starts to move up, when the market starts to move up, and this goes to Ray's question here about beta being kind of the coefficient of movement, Johnson & Johnson is likely to be a lower beta stock than, say, for instance, Amazon. I'll show you where we can find that, right? So we're going to go right now to the Analyze tab, and I'm going to put in here J&J, okay? And one of the things that we might look at here in the context of this particular stock is kind of its perspective on price movement. Now, one of the things that we might see in this information is, things like price to earnings ratio, those types of things, right? That's going to give us a sense of that kind of valuation, right? But when we go, say, for instance, to the trade tab, let's go to J&J, and we open this up. One of the things that we might then also look for in this particular case is an understanding over here on this right-hand side. So now here's where I am. I'm on the trade tab. I'm looking at Johnson & Johnson. I'm looking at the information about the underlying stock. And I'm over on the right-hand side looking at this fast beta, which says that this is a company with a minus beta. If we're looking at this relative to kind of the default, which is the SPX, this moves a little bit slower than the SPX, meaning from a beta standpoint, when the SPX moves up, this isn't going to move very fast, right? In fact, it may even move a little bit contrary to what the SPX is doing. But if we were to look at a stock like Amazon, AMZN, right, which we generally look at as a potential growth stock, right? Technology, consumer discretionary, certainly because they rely on retail sales to a certain extent, but also technology driven in AWS and other functions. This typically tends to have a faster or higher beta, meaning that when the market moves up, this moves faster than the SPX or faster than the market. So that might be also a hallmark, Ray, of the difference between a value stock and a growth stock. A growth stock typically tends to have a higher beta and is more reactive to that market movement. The market starts to move up, those growth stocks tend to be some of the leaders. And that kind of takes me back to this discussion that if this market is starting to move up, if this indication of a divergence, this bullish divergence that we're seeing here in the SPX and in the NASDAQ and in the Russell 2000, and probably even a little bit more strongly here in the Russell 2000 with this big bullish engulfing candle today, that would suggest that that rotation back into some of these leaders as buyers start to step back in, which we can see happening, might favor high beta names, i.e. might favor growth names. Does that make sense? That if the leadership resumes, if we see rotation into bullish names, that it's likely to come in those high growth names or those beta names, those potentials for stronger growth. Now, here's the other thing to think about. In terms of relative terms, if I were to put these three charts together, side by side, which one of these charts has been hit the hardest, do you suppose? Does it look like? I mean, just from an objective standpoint, right? We can look at the year-to-date change. We can say, look, year-to-date, SPX is down almost 4%. Year-to-date, NASDAQ is down almost 8%. Year-to-date, the Russell 2000 over 8% down. Month over month or month-to-date change, up 1%, up 1.5%, up 1.6%, right? And weekly, the SPX kind of seeing that rotation back in, maybe a little stronger than the Russell 2000. But if the Russell 2000 has been pushed down and we're looking for leadership, again, a lot of that leadership may in fact come from not multinationals that are diverse, but those that have growth potential in the small cap space. Because small caps typically often, both from a upward movement and a downward movement side, typically tend to lead the large caps. That's where you see innovation, that's where you see investment, that's where you see potential opportunities to take advantage of that growth perspective. So what we're going to do in this discussion is we're going to look for stocks that have the potential to take advantage of a rotation back into the Russell 2000. Again, if let's kind of talk about it in the swirling miasma of the tariff situation that's going on, right? If the presumption is that tariffs are going to be negotiated and reciprocal, and that at some point in the long game that they are going to have a beneficial effect on the U.S. economy after short-term turmoil, then perhaps some of that gain is going to come from decreased interest rates, potentially, right? We've seen rates going down. In fact, if we were to compare rates here, I'm going to go to our studies and I'm going to go to add study and we'll go to a comparison study and I'll just pop in here /10Y. Now, this is a futures contract, but I'm using this as a futures market as a indicator of what interest rates have been doing. So I'm not using this as a tradable instrument. So I'm clicking on here. So what we've seen with interest rates is that interest rates have been generally moving lower. And those interest rates moving lower were preceded by the small caps, right? Interest rates rising, that brought the small caps down. Interest rates moving lower, that may be a precursor to the small caps turning back up. These stocks tend to be, especially the growth stocks that are borrowing money for innovation, these stocks tend to be interest rate sensitive. So as interest rates fall, that could be potentially an indication of strength within the small caps, right? Okay, so now if that's the case, what we're going to look for is a group of stocks that have the potential to gain movement, price appreciation within the small cap space that may be benefiting from the ultimate longer game effects of the tariffs, which might be lower interest rates and a stronger maybe rotation into manufacturing economies. That's also going to be a big part of the small caps. So here's what we're going to do. We're going to go up to our scan tab up here at the top of the page. Okay. So I've taken you to a couple of different places. We went to the Analyze tab and Fundamentals. We went to the Trade tab and we looked at underlying stock information. Now we're going to go to the Scan tab at the top of the page. And I want to build a scan. So what I'm going to do is I'm going to reset this filter. I'm going to reset this scan just back to its defaults. Now, here's where, once again, I'm going to point out that there are differences between the paper money platform and the live trading platform, right? In paper money, study-based filters do not work. So don't get frustrated. I'm telling you right now. I'm sharing that with you. I'm saying if you try to add study-based filters to your paper money account, they will not work in the scan tab. This is a demonstration account. It behaves as if it were a live account. I guarantee you it is a paper money demonstration, not real account. Okay, so no questions about that. From that standpoint, it is a demonstration account, but studies behave that way that they would in a live account. So here's what we're going to do. Here's what we're going to build. The first thing I'm going to do is I'm going to draw a Venn diagram. And the Venn diagram that I'm going to draw is this one. It starts with this circle right here, which is small caps. So we're going to use the Russell 2000 as measure of small caps. So we're just going to do R, I'll just abbreviate this by R2K. Okay, Russell 2000. Okay. Now the other side of the Venn diagram that we're going to draw here and we're going to create is this circle, which is probably going to be a little bit smaller, and this is optionable. OPT. So we're not going to talk about options in this particular discussion, right, today. But let me ask you the question simply, right? what would be the reason why we would want to filter our search, our growth stock search, to this component of this Venn diagram, this intersection of the Venn diagram that includes small caps that are optionable? Why would we want to have optionable be one of those characteristics that we might want to include in a growth scan? What do you suppose? And while you're answering that question, I'm going to keep that Venn diagram in place, but I'm going to add how we're going to build the Venn diagram in this search function, right? Or in this scan function. So go ahead and answer that. Yeah, it could be an indicator, right? Brown Buffalo says, for sure. Indicator, though, of what about the stock? What about the nature of the stock? Liquidity, great. Ron's got it right there. Perfect. A good liquidity indicator. Not a guarantee by any means, but it can put us in the right neighborhood for stocks that are liquid, for stocks that have interest from institutional investors generally. And the reason for that is options oftentimes are used as hedging instruments. Who's got it? If we've got options available to trade on those stocks, then institutions can use those options to hedge those positions. And therefore, there's likely, Kevin Baker knows it, right there, right off the top, liquidity and protection of options. Okay, so let's do this. What I'm going to do is I'm going to come up here to scan in all stocks, and I'm going to pop in here, and I'm going to come right down here to public and to the Russell 2000. Okay, Russell 2000 is going to be my first scan in, and this intersect with is going to be the other side of the Venn diagram. So I'm going to intersect with category all optionable. Okay, so I'm just going to choose a category. So again, we're not trading options. I'm not discussing option strategies. I'm simply using this as a search criteria to build our Venn diagram. So now what I'm looking at is the intersection, this group of stocks right here, right? Oh, normal, that's a great question. That's a great comment to this, right? Lower strike price premiums, cool, I like that. All right, so that's what we're gonna do. Now, we're not gonna exclude any out of here, but we could if we wanted to, right? We could exclude, OTC stocks, which we can do. We can kind of carve a little bit of a carve out of there, so take out some of those penny stocks that are in this list. And we could use that as kind of a Venn diagram filter, which is another circle here, but we won't. We're just going to leave it as it is. So now that you have that understanding of how this scan is being built, that's what we're looking for. So if we were to just run the scan right now without any parameters of filters on this list, we run the scan, we're going to get 1,532 that exist in that space in between Russell 2000 and all optionable. Okay, but we don't know anything else necessarily about any of these stocks within this list. So what we're going to do is we're going to accomplish a couple of filters here. We're going to put in a couple of filters. Now, one of the filters that I'm going to put in this list is this one. So I've got a couple. By default, it sets up 3 filters. We don't have to use all 3 filters, but we're actually going to use a couple of different ones. So what I'm going to do is I'm going to come up here to net change, and I'm going to change net change to something else. I'm going to change net change here to last price. And the reason I'm using last price is that's the last trading price. So if we see movement happening in the pre-market or the post or the aftermarket or during the cash market, we're going to get that. And now what I'm going to look for in this particular case is kind of a valuation or a range, right? So if I'm an investor and I'm looking to buy growth stocks, I don't want growth stocks that are trading necessarily at big stock prices, right? Over exuberant stock prices. I don't want necessarily bookings.com. So those stocks that are trading over $1,000 a share, $800 a share, $900 a share, tend to limit availability on the part of retail traders, right? So what I'm going to do is I'm going to find a reasonable range here. I'm going to go somewhere between about $40 a share, because that gives some room for these stocks to be shorted to the downside by institutions, which adds to two-sided trading and adds to liquidity. And on the top side, I'm going to keep this down within, say, about $100 a share. So we're going to go between 40 and $100, $60 range. on these share prices. And if I run the scan now I've cut that down from 1,500 to 278 results. 278 results that fall in between those particular characteristics. Now, the next thing I'm going to do here, if I were to just choose volume right here, and I were to just filter on volume, that's going to be today's trading volume. I don't necessarily want today's trading volume. Today's trading volume likely skewed by events that are happening. So here's what I'm going to do. I'm going to kill that filter. I'm going to add a different filter, and I'm going to add a study filter to this mix. Now, remember, I've already pointed out, study filters don't work in paper money the way that they do in live trading. In fact, they don't work at all in paper money versus live trading. But what I'm going to do is I'm going to come in here, I'm going to choose a study. Now, I'm going to scroll down this list to these volume-based studies. And what I'm going to do is I'm going to choose average volume. Now, look, if you're doing this in paper money, you can do that regular volume, that daily volume. That's not a problem. You just have to recognize that it might not be consistent with that average. So keep that in mind. But we're going to choose the average volume study, and we're going to say, look, over the last, say, for instance, 10 days, average volume has been where? So I want to see the last average volume for the last 10 days above 1 million shares average daily volume. Why? Liquidity, right? I want liquid stocks. I want stocks that are in the front of mind. I want stocks that are being traded by institutional retail traders. I'm not, in this particular case, looking for diamonds in the rough. I'm looking for stocks that have the potential to be seeing interest on the part of institutional and retail traders, right? Not looking for diamonds in the rough. So I'm looking for stocks that have a fair amount of trading liquidity, better than 1 million shares of average volume over the last 10 days. And now I'm going to run that scan again. And now running that scan, here's what I've come up with, right? I've come up with a list of 42 stocks that are all small cap stocks that fit within that range, $40 to $100 a share, and have greater than 1 million shares average daily volume for the last 10 days. Cool. What else could we add to this mix that might be something that would be potentially desirable? How about positive dividend yield, right? So we can add another filter here, and we could add a fundamental filter to this mix, and we could come down here and we could say dividend yield. Now, this is going to be kind of that conundrum, if you will, right? Because remember, we said a lot of growth stocks don't yield dividends. Certainly not as many stocks, growth type stocks, yielding dividends as do, say, for instance, value stocks that are not as aggressive in terms of growing their stock price, because that may shift dividend yields. But if we can find both, right? If we can find both a stock that is in growth mode, growth type stock, good liquidity, is optionable, and yields dividends, holy cow, right? Wouldn't that be a watch list that we could potentially see some trading opportunities in? And again, not a recommendation, simply a means of expressing what it is that we're trying to find in this list. So what I'm going to do is I'm going to come in here and I'm going to look for positive dividends, right? So minimum of a 1% dividend. And I don't want to see huge dividends necessarily, because I don't want to be looking for stocks that are big dividend payers, because that's going to hamper stock price growth or appreciation. So I'm going to say between 1 and 4%. Now I could type that in. I'm just going to slide my slider over between 1 and 4%, and I'm going to run this scan again. Now what I've done is I've limited this group. We've gone from 2,000 to 1,500 to about 278 to 47 to now 11 stocks that meet these particular characteristics. Now, I'll tell you what I'm going to do for you, because I like you guys, and Michael Fairborn likes you too. So Michael's going to help me out with this. But thank you again for being here and joining me for this webcast. What I'm going to do now is I'm going to save this scan query, and we're going to call this growth with dividends, small caps. And I'm going to save that scan query so that I can come back and I can load it up again, right? Now what I'm going to do is I'm going to share that with you, and I will also put this in the description page for this webcast so that you can see it at a later date. And for those of you that are watching in the recordings, you can grab it as well. Now, when I share this, that's with this disclaimer that shared items are not guaranteed as to accuracy or time, nor are they guarantees of suitability or any other type of performance, right? But I'm going to share that with you so that you have it. So here's what we've got. Now, we've got that list. I'm going to run that scan one more time. There's our 11 stocks in this list. Now watch what I'm going to do. I'm going to save this as a watch list, and I'm going to call this small cap growth. And once I've saved that as my small cap growth watch list, now I can come over to my Market Watch tab. I can open up my personal watch lists, and I can grab that small cap growth watch list. And right there, that is updating based on current information. So there are my stocks in this list. So now I've got, look, Cheesecake Factory, Cracker Barrel, we've got Signet Jewelers, we've got Terex, we've got KB Homes. So some of those that are going to be sensitive to interest rates, some of those that are domestic, that aren't necessarily going to be suffering potentially from tariffs. And if we look at what's gone on today, generally the majority of those are seeing price appreciation. So let's take a couple of these and let's pop them into our chart and take a look at how we might approach trading those. So let's take the first one on the list, and that's JXN. So I'm going to click on it. Notice that I've got my charts linked to my watch list. I've got this symbol link here. I've selected 9 Lilac. I'm going to go over to my chart, and I'm going to bring up my single grid chart. This is my kind of sandbox to play in. Okay. And I'm going to go back to my Market Watch tab, click on that, go back to my chart. There's JXN. And I can see what's been going on with Jackson Financial, right? Yes, it will be in the webcast notes as well. So what I'm going to do first of all is I'm going to look at the forest and the trees. I'm going to go out to a 3-year weekly chart, and I'm going to say, hey, that's a stock that has pretty consistent dividends. I can see them down on the bottom of the screen. In fact, dividend growth over the last little while, and the price of the stock has been appreciating on a 5-year basis. This is a 5-year, actually 3-year weekly chart. So this is a stock that's been going up. It's pulled back a little bit, maybe into a support level. And if we look at it on a short-term basis, let's come back down to this 1-year daily chart. We could argue that maybe it's starting to build a little bit of a symmetrical triangle going on here, looking for some price appreciation. And what do we have there as well? We have that divergence, or that move higher in the RSI, indicating that there is some buying pressure coming back into the stock. No guarantees that it will go higher, but if we were looking to place a trade on this stock, one of the things that a trader could do is look for a discrete point to enter the trade, which might be a cross above that diagonal downtrend line, or in other words, a diagonal breakout. So we're going to put a trade on here as an example trade. This is for illustrative and educational purposes only, but I'm going to say buy custom, or actually buy stop, if the price of the stock breaks this 8803 diagonal trend line. So I'm going to right click, and I'm going to do a buy order. I'm going to edit that buy order, and I'm going to change that to a buy stop, which says stop, don't do anything until the price of the stock breaks above that 8803. Now, value investors, here's one of the big differences. Value investors are going to say, why in the heck are you not just getting into the stock at the lowest possible price, right? Getting in when it's on sale. Why are you waiting for this price of the stock to be higher instead of buying it when it's a value, buying it at a discount, right? Because this is a growth stock. We've found that because we've dug into this, and we've specifically set up our search to find those stocks that have growth characteristics, right? So now what we're looking for in this particular case is that entry to come if price moves above a particular discrete point. If this happens, then this is what we're going to do. Else we're going to wait. No guarantees that it's going to keep going that direction, but we're putting this order in as if it's going to keep going, and the expectation is that it might. Now we're going to manage that trade on an ongoing basis. But what I'm going to do is I'm going to click on confirm and send. I'm going to put this stock in my stocks group. I'm going to read through this order, make sure that I'm aware of any characteristics and any transaction costs and any alerts that I need to pay attention to. And I'm going to click on send, and we're going to fire that order off. That's a buy stop order. Let's go back to our watch list for a second. We'll go back to our market watch list, and let's pop into another one here. And I want to take one kind of in the middle of the group here, and that is Cheesecake Factory. Just because I've been busy today and I did not get to have lunch yet, so this is one that's appealing to me in this particular case. So notice what's going on. Again, that's not a recommendation, but Cheesecake Factory has good food, just saying. But that doesn't mean that their stock price is moving. But what do you see happening here as well? Again, in this kind of growth perspective, looking for stock price appreciation. Now, we're on the 1 year chart here. If we go out to that 3-year weekly chart, what's the stock price been doing? What have the dividend payouts been doing? Consistent for the last 3 years. That dividend payment has been really consistent. It's not a guarantee because dividends can change. So what we're looking for are growth-based stocks, small caps that are less sensitive perhaps to some of those areas that might see tariff impacts and that have growth potential to move higher and generate dividends. So once again, this has moved up above that diagonal trend line. So some traders might wait for this to pull back and bounce, or they might wait for this stock to move above, say, for instance, a horizontal trend line before getting into the trade, as this is starting to move maybe into a little bit of an ascending triangle. So let's go back to that watch list for just 1 second and let's see. We really don't have a lot of technology stocks within this space, but if we were to perhaps change this focus, we could do that. One of the things that we can do is we can go to our Visualize tab and we can visualize our personal watch lists. Let's find that one, our small cap growth. Here's our small cap growth. In our Visualize tab under the Market Watch tab, as opposed to just looking at the watch list, you can see that all of those stocks, all of those 11 stocks, we're seeing growth today and upward price movement. So not a guarantee, but one way that we can get to and drill down into some of those growth-based stocks. So now what we're going to do is I want to pop back over here to the Schwab coaching page. This is where I told you to go to find those in-person events. And this is where you're going to find those registration links for each one of those in-person events. It's also where you're going to find things like our live webcast calendar upcoming. And for those of you that have not been with us before and are just joining us today for the first time, check out youtube.com/@Trader Talks webcasts. And you're going to see our entire schedule and our entire archive of our webcast pages. And what I would ask you to do is, as I asked before, click on that subscribe button. If you haven't done so already, you can use that search function to look for any of the topics that you want to dig into and get a little bit more detail about. But you can also follow me on X @BenWatsonCS. You can follow Mike Fairborn @MikeFairbornCS. Lots of great resources there in terms of growth and value stocks. We talked a little bit about growth, value, and income. We talked a little bit about building a search. We looked at examples on the platform. So my thanks to all of you. My thanks to Michael Fairborn for helping out, and to our great production staff. Guys, go out and have a great day. We'll see you back here again tomorrow. I'm going to be on the Schwab Network. Oh, by the way, you find the Schwab Network right there on the Thinkorswim platform or at schwabnetwork.com. And remember, that's brought to us by our media affiliate, Charles Schwab Media Productions. Thanks, guys. We'll see you again very soon. I'm going to be on the Schwab Network tomorrow morning, first thing in Market Movers, about an hour before the market opens. So we'll see you then. Take care, everybody. Bye-bye.